without further ado, may I call upon Professor Prof. Cheah to give his presentation on policy consideration, industry trends, and opportunities. Prof. Cheah, the floor is yours.
Thank you, Prof. Pervez. First of all, let me thank the organizers for this wonderful opportunity to share my views on this very timely topic. Importantly, as said by Dr. Apurva from World Bank, he has set the stage for a very exciting discussion on, especially on the banking and the interrelationship with economic performance and that. So what I'd like to focus on is basically three areas. One is in terms of policy consideration as to whether what is the trade-off between growth versus stability and resilience. As you all know, the real economy on one side is supported by the financial economy on the other side. They are like twins, conjoined twins. So it's very important to ensure that one supports the other and not basically asynchronized with one another. So it's important to look into this policy consideration. And then importantly, what are the key industry trends and opportunities, priorities and pitfalls, some of which have already been highlighted by our keynote speaker. And then I'll offer some perspective on the future of banking and finance. Now, if you look at the current, to set the context in terms of the current situation, especially on the macroeconomic context, you'll find that despite the multiple and increasingly frequent as well as varied shocks, not just economic shocks, but also geopolitical, social, environmental, and various other financial market turbulence. All these are having a very what we call negative impact on both the economies as well as on the financial sector. But importantly, what is noteworthy is that most emerging countries, particularly ASEAN economies, they have remained resilient. And very important, although the global shocks, the various kinds of shocks in what we call the current era, some would call it perma crisis. Means we are in a state of permanent crisis now. So I think it's important to note that global shocks, they have weakened our economic fundamentals. But as far as we can see, I think except for certain countries that face country-specific risks, like for example, armed conflict in Myanmar and all that, the rest of the economies are relatively resilient in the sense that they have rebounded from all the, of course, earlier on we have the Asian financial crisis, but the more recent crisis, the global financial crisis, the pandemic, and then of course the recent shocks posed by the armed conflicts in Russia-Ukraine war, as well as the Gaza issues. And what's important to know here is that the resilience have been underpinned by what we call a range of what I would say appropriate policies, sound policies, and importantly, the steps taken by the respective government to actually strengthen the economic resilience of the various economies. And these policies include market-oriented policies, openness to trade and FDI, infrastructure development, and also importantly, the economies, most of the economies are either at near or full employment, and that's very important in terms of social stability. And then importantly for Asia, including ASEAN, most of the countries, we do have a current account surplus, and that's important to buffer, especially the financial sector, against the volatility in the current global, highly integrated financial system. And this, of course, this current account surplus is a mirror image of savings surplus. So I think, importantly, in this age of turbulence, especially in terms of financial market, surplus savings is very important to as a buffer, as a reserve against financial volatility transmitted through the regional as well as global economy. And then importantly, I think since the Asian financial crisis, we do have a fairly healthy financial systems, which I've turned to now. So the question now is, of course, economic growth versus resilience. And you note that despite the various shocks, the financial deepening, continues to happen. Financial deepening in terms of broadening as well as deepening the financial system of the various economies. And as you can see here, many of the economies if you are looking at credit by deposit banks, that means the commercial banking system, they are actually more than 100% of GDP, which means that financial mobilization is at a stage where it's equivalent to the advanced economies, the mature financial systems in the West. Except, of course, there are still opportunities that we see in ASEAN, Philippines, Brunei, Indonesia, all that still have relatively low financing by the banks. So I think these are what you call countries, economies that still have large room for further banking, for what you call increased banking activities to actually cover the entire, more fully the economy. But what's important to note is also that the banking systems in ASEAN are fairly well capitalized, and importantly, they also still remain profitable, and that's an important condition. Capitalization and profitability are important to undergo to withstand a lot of stresses that are currently happening because of various sectors that we see here, various risks that we face. Here I'll double up Dr. Apuwa's 3S, I'll double up the 6Ds. So as you can see here, each of these have their own significance in terms of impact on the respective banking sector. Some are really quite advanced. A lot of banks are into decarbonization financing and all that. But importantly, the digital transformation, these are the growth areas that you can see here. I think our two other panelists will go more deeply into this. But importantly, the digital transformation is one of the key areas that we see in terms of further growth of the economy. Now, the question now is, of course, important part of the current state of the economy is that we are in highly divergent in terms of economic performance within each country, across the different sectors, as well as across countries, across economies, as well as regions. So this unevenness in global growth and performance will also likely lead to divergence in macroeconomic policies. And with diverging in macroeconomic policies and trends, you also see that the financial markets will also become more turbulent. So that's why it's very important to emphasize increased monitoring and importantly for banks and other financial institutions, they need to strengthen their resilience and do more stress testing. And then the future, let me conclude here with what's the future here. The one is, of course, conventional banking and capital markets. They still remain the mainstay of financing production, consumption, investment, trade, and corporate activities. So there's no doubt about it. And then importantly, what we are seeing here, the growth of the fintech and big tech in terms of financing, they are still relatively small compared to the overall GDP. Some countries have shown 100% of GDP, whereas the fintech and the big tech, in terms of credit flows from these entities, they are only less than 1 to 2% of GDP. So there's still a huge potential for growth, but importantly, the growth has to be accompanied by what we call ability to harness the fintech and the digital tech and all that to boost, importantly, financial efficiency, inclusiveness, and also now, because of the cybersecurity threats and all that, security and also resilience in terms of enabling the regulators to be more supportive of the latest developments and innovations in the banking and financial sector. And then importantly, to ensure that we do not over-financialize. There is too much creation of money is what is afflicting the current global economy in the West, especially in the US. The unconventional monetary policies have resulted in tremendous liquidity in the financial system to the extent that now the bond market, the treasury market is likely to face severe stress. And these are the result of what we call over-financialization. But importantly to note is that a lot of ASEAN economies, you'll find that you have a different so-called in terms of development. Some are fairly advanced, they're less advanced, would be able to tap on the opportunities presented by conventional banking and finance to actually sustain their growth momentum. And then, of course, as noted earlier by keynote speaker, a lot of financing are required, not just for social protection and social restructuring and all that, but so importantly, to face against the threat of existential threat of climate change and all that. So green financing, decarbonization, and all the other shift to what you call the energy transition shift are very important to ensure a sustainable world and, importantly, a future that is secure, both environmentally as well as from an economic and financial perspective. Volatility can be managed by enhancing, by deepening the financial system of each country. And then importantly, in order to avert any over-concentration of credit risk, I think it's important to also focus on how we can increase equity financing, whether through venture capital or private equity and all that. So that will help to balance the over-concentration of credit risk in the banking system. And then importantly, the so-called the debt-equity ratio has to be adjusted, have to be in the right balance. So with that, thank you.
Thank you very much, Prof. Cheah, for providing an overview of the economic background and also the 6 Ds and the future.